Hello, in this video we're going to be talking about technical analysis of indices in the Forex market. This video is presented by spreadbettingportal.com. So what is technical analysis? Well, take a look at this chart. Does it scare you? Now, admittedly this is quite a cluttered chart, but basically what we're seeing is a technical analysis chart, or a chart where a trader will be using technical analysis to gauge points of entry and points of exit. So should you be scared of this? Well, not really. The first thing you have to understand with technical analysis is that it's not technical. It's kind of one of those terms that kind of sound much grander than its true sort of meaning. Yes, it is analysis because you're looking at something, but it's not technical, it's more visual. So if you're more sort of if you can spot patterns in things, that is one of the key aspects of a very good trader, somebody that has the ability to spot recurring patterns. So analysis, therefore, is the analysis part is basically where we're looking to being able to read patterns in the market, and these patterns are showing behavior. So we're reading patterns visually of behavior, and this behavior is showing change in sentiment in the marketplace. So by reading these, we use a charting package which you can either buy relatively cheaply, or spend thousands if you really want to. It's entirely up to you, but it still shows the same data. But most brokers now, most spread betting companies, do actually provide a package, usually online within the account, that you can use that allows you to sometimes, a greater or lesser degree to analyze the market data. If you want to sort of be more specific and use particular tools, then you might be better off buying a software program and then connecting it to a data feed. So what will technical analysis show you? What is it that we're looking for with technical analysis? Well, amazingly, not a lot of new people that begin to trade understand what it is that they're looking for, and all that we're looking for with technical analysis is the market sentiment, how the market is currently feeling about a particular stock or option or chart or whatever it is. There's millions of them out there, and all we're seeing is the current market sentiment, and by being able to judge this sentiment enables us to gauge as to a certain degree whether the market will move in a particular direction or not. Now, technical analysis is by far the most common method used by professional traders. In fact, 99% of traders globally use it, and it really is can be as deep and as technical as you really want it to be. But I really wouldn't advise anyone to have it hugely complex, because basically you're making your job harder. So basically keep it to the KISS method, keep it simple, stupid. Just concentrate on what you know works, and by doing so it allows you to do what you need to be doing, and that's looking for changes in sentiment in the marketplace. One thing is that a lot of new traders tend to not forget, but kind of assume, is that they believe that it can see the future. Well, actually, that's not entirely true in any respect. If that was the case, that every trader would be hugely wealthy. No, it can't. It really can't see the future in any respect whatsoever, despite what some new traders believe. All analysis does is, as I've said before, is it shows a change in sentiment, and allows us an easy ability to, or relatively easy ability to, plot changes of lows and highs. And this combined creates patterns of behavior which show sentiment, or changes of sentiment, or potential changes of sentiment in the market. And that's all we're looking at. We're reading prior behavior and seeing where the market sentiment has changed. And by analyzing that visually, we're then looking to a greater, or rather than lesser degree, to understand where the market may be moving. So by analyzing the sentiment from previous points of change results in a possible similar change or moves. So, sort of kind of history in a way kind of repeating itself. So if we look at what supports and resistances are, now a support is where a price has moved and hit several times. And a resistance is where the price has moved up and hit a resistance, like a ceiling, for example. So here we have a plot line of a chart moving, and we're looking at these peaks and troughs. And one of the methods used for what you could use swing trading to trade these points of extremes. And by using these support lines and resistance lines, it allows us to gauge change in market sentiment and where it's likely to happen again. So for example, we've seen that it's hit support twice before, and say it's coming here and it's moving back down. There's a strong chance that it could move that way again. And as much as we've seen a resistance, we can likely see that there's a slight move down. But if it breaks through that, we'll be looking at the next resistance above if it's happened before. And sometimes resistances can go way back, because obviously charts don't always trade upwards or always trade downwards. There's previous history where we can see previous points of resistance being played out much later in the future. So to recap, support is where a price has dropped and bounced back up again a few times. These sort of points of support is basically where the market, or the sentiment for that market, has recovered and we're seeing it move up. And basically when you see these points of support, it's then that you're looking to buy in, to go long, to buy that particular trade. You go long on that trade with the expectation of it going up. And with the resistance, it's the reverse of that. So we're seeing a point where the price data has hit a level and it's repeatedly dropped from. It's a ceiling. It's a level that it can't break through, or hasn't broken through for a while. And this creates a point of resistance to the price breaking through that, and traders look to go short from these points. They look to sell to make a profit from that. So now we understand what supports and resistances are, we understand what analysis is and what it can do. We look at analysis in the indices. Now, one of the things you have to understand is that indices are pretty good, certainly good for the beginner, because they move much slower. And there are many, many indices out there, but the most common ones that we're all aware of are the FTSE 100, CAC 30, DAX, and so on. Now, these are good places to start. Usually the European and the UK indices are good places because they tend to move a lot slower than, say, those of our American cousins, which, say, we have the Dow Jones Industrial Average, and that tends to move a lot faster and in shorter time frames, and can cause a lot of problems for the inexperienced or new trader. So where do you start? Before you start any trading of any kind, you have to understand analysis. And the key points of what we've gone in this video and a couple of other videos about analysis is that we also have a video on techniques that I suggest you look at, is that it's about changes in sentiment. That's all we're looking for, and finding supports and resistances, and then trading from those, or trading the trend if we're looking at one of the techniques called a golden cross. So we start by finding supports and resistances and trends in the FTSE 100, CAC 30 and DAX and so on, and we're monitoring for looking for these changes in sentiment on those charts over a period of time. And during that we watch you watch other training videos on technical analysis and learn more and more. It's about, you're not looking to trade just yet, you're just looking to understand what's happening and why it's happening. And that's probably one of the best things that you can do. Look at the live market, look at the indices, begin to get used to finding supports and resistances. Look at where trends are breaking through these supports and resistances. Look at the other video for common methods of trading strategies, and you'll see a couple of methods there that will come in handy to help you do that. So what about the Forex market? Well, the Forex, or the foreign exchange markets, are massive. In fact, they're the largest market in the world. Billions and trillions of dollars are traded every day. But one of the key things you have to understand with the Forex market is that it does require a very good understanding of technical analysis. Basically, the Forex markets are traded in pairs. Forex pairs are one currency opposed to another, so one converted into the other and vice versa. So here we have the EUR US dollar, which is the euro dollar to the US dollar, as a conversion from one to the other. And this is shown as a traded pair in one price, because it's the conversion of one to the other, in a chart which we'll show you. So here we have the EUR US dollar presented as Japanese candlesticks, which we have another video of, which you can watch. And here you can see just basically the price movement during the day of the euro against the US dollar being converted, and that's basically plotted over time. And with the Forex, because it moves so quickly, it can be traded intraday, and in fact a lot of traders do trade intraday, which basically means in and out in one day. So as I was saying, what's with the chart? A lot of you are probably looking at it saying, what the hell is that? Basically, those are Japanese candlesticks, and it's a massively popular way for traders to see the data. It's a graphical representation of the data, and it's used it is used a lot in all forms of trading, but it really has in fact, I've not seen anyone not use it in the Forex market. But trading the Forex market and the euro and any of the other Forex pairs does require a massive and clear understanding of the supports and resistances and the chart patterns for that particular pair. So it's not just the understanding, you have to understand that particular chart very well too. So one of the other things that we see with Japanese candlesticks is that they tend to provide patterns, and when they, over the hundreds of years that Japanese candlesticks have been around, because I believe they started on about when they were trading rice, and they were used to judge the fluctuation in prices of rice a long time ago, and they started to note changes in the patterns, and that these patterns would signal certain behavior or expectations of sentiment as a result. So it kind of acts as a precursor to a certain price movement that's happening. So if you can understand these patterns in the Japanese candlesticks, and you can see these patterns, they tend to give you that little bit of extra advantage. And here we can see some very common patterns. So I mentioned in one of the other videos there was a head and shoulders, and we see a sort of head and shoulders here, and there's just so many patterns that predict certain sentiment outcomes as a result, and it's worth looking at. It's very interesting to look at how chart patterns work and what can be gleaned from them, but overall they still only really work with supports and resistances again. So again, it's all about finding and learning how to find supports and resistances. So why am I saying down that rabbit hole? Well, if you've read, I'm sure you've read Alice in Wonderland, and when she looked down the rabbit hole, that's when her sort of adventures began. And this is kind of your sort of rabbit hole, as it were. You are Alice in Wonderland, beginning that journey. And trading is an enormous subject, and analysis could cover hours and hours and hours of video. Hundreds of hours of video, easy. It's a huge subject and growing every day as newer, more different methods are discovered. Just simply using analysis in just the indices would cover several books. So the key thing really to remember is that you don't have to know everything. You should always keep learning. You should always be looking to learn and know more. But just remember, it's not important to know everything straight away. It's understanding and using what you know already. And the key aspects are being able to spot trends and being able to spot supports and resistances. Those are the 3 things that you must learn to do. So don't forget that we have plenty more training videos on this site. Don't forget to come by and say hello and look at the amazing deals that we have on some of the leading brokers that are being offered. And just visit us at spreadbettingportal.com.